I have a great pleasure in welcoming you all on the knowledge sharing weekly session of Mehta and Mehta. Today is a very important topic on Audit Committee. For this, we are having one of the panel members, Mr. Anil Gupta, who is our own fellow member from the CS Institute. And he is also a insolvency professional practicing engaged. He has got a practice almost more than about 2 decades or above in the corporate and allied laws, and he has been providing out-of-box solutions on the complex and legal strategic issues. And he has been actually contributing extensively to our profession through the various roles of the ICSI, because he has been a regional council ex officio member of the managing committee, and he held the position of a member in the Northern India ICSI chapter, and he was also a managing committee member in the Lucknow chapter and chairman of the research and publication committee, all these things. And not only that, he has been also a member of the secretarial standard board and the auditing standard board of our own institute. And he has worked with several core groups of our members institute in the law and corporate governance committee. And he is also associated with the PhD chambers on the National Council of Association and Merger of Acquisition. In fact, he has also published a lot of publications, especially ICA Premier on the company law voluntary liquidation, and also the handbook on interim resolution professionals. And his contribution includes Vision New ICSI 2022 Compliance Management Audit Configurations. Even his contribution very immense when he actually reshaping our syllabus for our executive and professional program or ICSI. And he is also visiting faculty in the various forums, and he has been a regular speaker in the various institutions. And I have a great pleasure in introducing him and welcome him as a panelist to our webinar.
Thank you.
Hello, 1 minute. In fact, after you are introducing Amit, let me also add 1 or 2 things to that. I have the privilege of working with Amit and the SSB for almost about 4 years. And after that, I watched him and also I have shared the dais along with him in several forums. In fact, whenever I used to see him in SSB especially, the kind of in-depth knowledge, the analytical abilities, what he used to have, I used to envy him. In fact, I wish I would have been having that kind of in-depth knowledge at his age, what he was having it. In the SSB, he used to virtually never used to hesitate to fight with the senior professionals. Sometimes what happens is that whenever you have to discuss or deliberate any issue or argue with any issue, always if the other person is a aged person, senior person at all, normally we leave it there. But he used to have that kind of a conviction. And he is to sometimes convince us also whatever his viewpoint is there. He is to make the effort. That is really appreciable in his this thing. And of course, I can go on talk about Amit for a long time, but anyway, that we will do it in some other time. But definitely one thing is there. He is a thorough professional. And in fact, he is an inspiration to say. And I'm sure that the participants will get benefited today with his knowledge as a panelist of this particular webinar.
Thank you very much, Sudhakar. Not only that, and many of our members also may be knowing it, Amit has been a regular person who has been attending our webinars, and he used to interact and he used to even contribute to valuable things in the out of the box whenever some questions, etc. is raised, especially in the taxation matters and other things, etc. and other thing and all. We have seen him. He has been there in our webinar regularly many times. In fact, he has raised various pertinent issues. That is the greatness of him. And secondly, coming to today's presenter. Today's presenter is none other than one of our senior partner in our Mehta and Mehta, Ashwini Inamdar. Initially, I can call her as a Puneikar. Now she has become a Mumbaikar. And she is a fellow member of our own institute, and he also holds a master degree in the law. She has also got almost nearly 2 decades of the experience. She started a career initially in the listed company, that is the Kirloskar Cummings Limited in Pune. And she is a senior partner in Mehta and Mehta today, and she has been handling almost about 300 portfolio clients, including 100 listed companies, actually, Mehta and Mehta. That speaks about her enormous knowledge and her ability on this subject. And she is also specialized in the listing compliances on the stock exchanges. And he has got a very, very vast experience relating to the listing agreement, takeover regulations. And she is also a certified post trainer, for your information, which is the latest thing which has been introduced as a reporting guidelines in the Corporate Governance in the Companies Act, and the board reporters to talk. She is a certified trainer, actually. And she has also regularly trains various corporate and also conducting various training program for insider trading, etc. and other thing and all. I can keep on talking to her. And lastly, she is also a certified CSR professional from our own institute. Great, Ashwini. She is going to present.
In
I
fact,
think.
1 minute. Let me also say one or two words about Ashwini also. In fact, Ashwini is also a very thorough professional with great knowledge at her command. Only problem with her, as far I am concerned, is she keeps a very low profile. In fact, for that kind of experience, knowledge, what she has at her disposal, she would have done wonders. And I was actually trying to push as much as possible so that she disseminates the knowledge not only at Mumbai or Pune, but in other parts of the country also. Only thing is that for whatever the reasons it is, she might be having work pressure or domestic pressure, whatever it may be. But it is high time for Ashwini to what's called to overcome that conservativeness and to be aggressive as far as the next 1 decade is concerned in the professional side. Please do that, Ashwini.
Yes, sir, I take your point. Thank you, sir.
I agree with you, Sudhakar. In fact, I have interacted with her when I was working with the Vodafone group of companies in Bombay, and I met her in a couple of occasions. And one thing is there, as you rightly say, anything referred to her immediately, her masterate in the subject will actually come out. So that is what I have actually witnessed in a couple of occasions where I interacted, really speaking. And she was also there in Pune in some of the presentation which we have made actually in one of the forums and other things and all. I have watched her actually. She is excellent knowledge. I agree with her. And coming to Sudhakar, I don't think that I need to introduce. We have been actually hearing from him for the last more than 2 years or so, and everybody knows him. And of course, me, I'm there always in the program. Coming to today's subject, I don't want to take much of a time for giving the introduction because already we have an expert panels on this who will give an introduction. But nevertheless, I would only put it, the audit committee is a very, very crucial committee from the good corporate's point of view because it provides the oversight of the financial reporting along with the internal control, internal checks. And also it sees the risk management to the greater extent, although we have a separate risk management committee, but pertaining to various financial related issues and again arising out of the whistleblower mechanism, etc. and other things and all. The audit committee has got a great role to ensure the transparency and accuracy of the accountability. Ultimately, everybody is interested in what is the figures. Whatever we talk in terms of the production, tonnage and sales turnover, ultimately everything is converted. What is the right side of the balance sheet? What is the left side of the balance sheet? What is the profit and loss account? What is the top line? What is the bottom line? That is what about it. So the audit committee has got the great responsibility ensuring the accuracy and also the transparency and the necessary disclosure, complying with the various applicable accounting standard and auditing standard, etc. and other things and all. This is a great thing. So in fact, as you are all aware, they are also having a greater role to see the fraud prevention, auditor independence, and etc. and other things and all. Now added to it, now everybody is aware the cyber crimes which are actually happening with the AI is coming in place. Even that is also added thing now to the audit committee. So the audit committee is a very, very important committee. I think our expert panelists will give more about that. I take a pause here. I actually hand over the mic to Mr. Amit to say a few words on the topic. Over to Amit, please.
Thank you, Bala sir, and thank you, Mehta and Mehta, for this opportunity to come and share my thoughts on the very important subject that is Audit Committee in the current context in which the dynamics are changing so very fast. As Bala sir was introducing, that artificial intelligence has so fast taken a place in each one's life. I think it has become indispensable, and the corporate houses who are not visualizing the impact of this transformation will be left behind. So the audit committee role also has to evolve as it has evolved in the last 2 decades of time. So I'm sure the today's topic will make all the deliberations which are learnings from the past, as well as the little futuristic approach, what is the expectation of the stakeholder from the audit committee, as well as what are the best practices which are being followed all across the globe, and what we can adopt therefrom. I think I'm very hopeful to have a very positive discussion on this note from other co-panelists as well. Thank you, Bala sir.
Over to Sudhakar, please.
Good morning, everyone. In fact, as Bala has said that one of the most important committees is Audit Committee. Rather, I can say very confidently that the important committee is Audit Committee. In fact, it is just like a home ministry, after the PMO, it is the home minister. Sometimes I feel that home ministry is having more work than a PMO. Same is the case here also. If you see the terms of reference to the audit committee, what has been given, it is sometimes I feel like, my board has lesser responsibilities and accountabilities than of the audit committee members. Unfortunately, that though they have not said mandated the qualification, the professional qualification for the chairman of the audit committee, but the kind of responsibilities and accountabilities what this committee is having it, that it is high time for us that SEBI has to consider and mandate professional qualification, maybe a chartered accountant, maybe a finance expert, having a kind of that MBA or something like that. Some kind of a professional qualification is required, so that he will be able to. Because otherwise, what will happen is people maybe just the ability to read the financial statements. Everybody is having that ability. Because, say, for example, if you take this regulation 23 of related party transactions, if a person has to identify the related party transaction, the purpose and effect of that is going to give. Several times, whenever I train the audit committees, the audit committee members ask this question: how to identify these transactions? If anybody has, sometimes it may so happen, even the CFO might not be knowing it. Even if you take a certificate from a CFO, that might not be sufficient. But if you have that expertise to read the financial statements, it is not a rocket science. And it is very easily you can find out that thing. In addition to that, say that this committee has been entrusted with greater responsibilities about the financial controls, the cyber security, forensic, insider trading regulations, monitoring, post monitoring. So many are there. But my question is that SEBI has mandated the induction of independent directors to the board. But where is the induction for the audit committee or other committees? Especially for the audit committee, induction is very, very essential. Similarly, the training also is very essential for audit committee members. If I become an audit committee member, I might be having some kind of an expertise in financials. But how about my expertise in other related areas? No doubt that audit committee members may have to take initiative. They can get the advice from other professionals or other experts at all. But training very, very important. In fact, about a couple of weeks before I was training a board, that audit committee member, when I said that audit committee members induction is very essential and training is very essential, the chairman of the audit committee who was sitting there, he was virtually clapped for me. He said, Mr. Sudhakar, you are the first person who has said this thing. So far, I haven't heard anybody saying this thing. And in our organization, we are going to have a training from you for audit committee. So it is very essential. And especially these days, you might have seen the NEFRA. NEFRA is having also a lot of expectations from audit committee. NEFRA is not happy with the way the audit committees are functioning. So NEFRA is expecting something beyond what the audit committees are doing at this point of time. I remember 2018, Mr. Ajit Tyagi has said that he was not happy the way the secretarial audit is being conducted by the secretarial auditors. And we have seen several changes have come after that, tightening the provisions, and they have brought in the compliance certificate also, which is now signed to be a secretarial auditor. You cannot camouflage a secretarial compliance certificate. You can camouflage a secretarial audit report. The NEFRA is also very soon going to bring several changes through SEBI. As far as audit committee is concerned, I can read that writing on the wall. At the same point of time, the audit committee also has to have compatibility with other committees. So I don't know how many companies involved that they invite audit committee members as invitees to the other committees. It is very, very essential for us. In fact, I request all the compliance officers or company secretaries who are participants in this particular webinar do what's called inform your audit committee chairman or do inform your board that the committee members of each others, they have to invite at least, if not more than one committee meeting, at least they have to be invited so that they understand that what is happening and what sort of integration they have to have. Especially audit committee and risk management committee have to work that hand in hand to ensure that whatever the responsibilities they have been entrusted with to discharge that. So we can say so on and so on about audit committee, not many things, but considering the time limitations, I give a pause here and wherever I have to pitch in, I will add further my views about this. Thank you.
Over to Ashwini, please. And as usual, participants can actually put their query and questions on the chat box, which will be taking it from time to time. We'll seek the guidance from the expert on this. And at the end of the session, subject to availability of the time, you can raise your hands and we will permit you to voice and we can discuss also if there is anything left over. That is the way it goes on. Please start putting your question and query in chat box. Another thing I wanted to inform, many a time the forum is the PPT shared is one of the questions which is being asked repeatedly, which I already replied. The PPT as such is actually not shared, but at the same time, the recorded webinar is disseminated via the YouTube. You can actually subscribe to the YouTube. It is available, which contains the PPT. That's all about it. Okay, over to Ashwini, please.
Thank you, sir. Good morning, everyone. Good morning, panelists. And as rightly said by Sudhakar sir and Bala sir, today we will be speaking about a very important committee on the board. In fact, as rightly said, it has more responsibility than the board in terms of certain decisions that the audit committee takes in its due course. Though Section 177 of Companies Act and SEBI regulations have prescribed the terms of reference, in certain instances, we have seen the companies and the audit committee going above that and adding much more responsibility on the audit committee in terms of the decisions to be taken or in terms of the recommendations that they seek from the audit committee. Though we'll be speaking about the eligibility and everything, as a secretarial auditor also, whenever we visit or we are presenting before the audit committee, the kind of questions that we get from these committee members make us understand that they are very well versed and in command when seeking any clarifications from us as a secretarial auditor. So before we start, obviously, as we have said, that it is a very important committee because it talks about the financial reporting is taken and internal control systems are being checked by the audit committee. It is also acting as a mechanism where it assists the board in monitoring the financial statements, the audit processes, what are the internal controls, the internal audit reports, the risk management frameworks and everything, and whether they are in compliance with legal and regulatory requirements. Section 177 of the Companies Act has laid down the provisions relating to its composition, powers and responsibilities, as well as Regulation 18 of SEBI LODR and Part C of Schedule 2 also provide for the detailed terms of reference to be had for an audit committee. When we talk about the eligibility, it comes from the Companies Act. Eligibility or which companies require an audit committee. It is said that every public company and every listed company and every public company. Now, Rule 6 of Companies Meeting of Board and its powers specifically say that the criteria given in Rule 4 of Companies Appointment and Qualification of Directors will be followed for forming an audit committee in a company. So every public company having a paid up share capital of 10 crores or more, or turnover of 100 crore or more, or outstanding loans, borrowings, debentures, deposits of 50 crores or more will have an audit committee. Now, these turnover or paid up share capital will be decided as existing on the last date of latest audited financial statements. Now, suppose a company is supposed to have an audit committee. However, it does not fall under the criteria as mentioned here for a period of continuous 3 years, then it need not comply with the provisions. Now, when the rules talk about this, it means that even if the threshold is not breaching or they are not required to be forming an audit committee, they will have to continue it for 3 years. After 3 years, if still they are not falling under the threshold, then they need not comply with the provisions of audit committee requirement. Further, the rules also talk about an exemption wherein a joint venture company or a wholly owned subsidiary or a dormant company need not constitute an audit committee. So audit committee composition is also...
1 minute, Ashwini. See, in case of joint ventures, though statutorily they say that you don't need to have an audit committee, but considering the sensitivity of a joint venture company, it is always advisable to have the audit committee. Because otherwise, what will happen is it will open the doors for a future conflict. Considering that, it is always advisable to have an audit committee. Rather, a strong audit committee is very much required for a joint venture company.
Yeah. Doctor sir, just one more point. Few days back, I got one query regarding exemption only. The exemption rule 4.2 says that any unlisted public company, which is a wholly owned subsidiary, is not required to have a audit committee. Is not required to have independent directors as well. So audit committee is also exempted. Now, what is the wholly owned subsidiary is a question. If I am a wholly owned subsidiary of a company registered in US, will I qualify for the exemption?
See, if you have a company incorporated in US, which is your wholly owned subsidiary, your question is that whether that wholly owned subsidiary is
It
exempted
is
from...
reverse, sir. Reverse. There is a company ABC Limited registered in US, which has incorporated PQR Limited in India. PQR is a wholly owned subsidiary of ABC. Will PQR qualify as a wholly owned subsidiary company? And will it qualify for exemption under Rule 4.2?
According to me, it doesn't qualify. According to me, it doesn't qualify because it is a wholly owned subsidiary of a company. But in this case, what you are mentioning, it is wholly owned subsidiary of a body corporate. Got it?
Because law does not, if I open the Rule 4.2, what it says, the following classes of unlisted public company shall be covered under sub-rule 1.
Okay.
Joint venture, a wholly owned subsidiary, and a dormant company shall not be covered. That means...
See, what I'm trying to say here is wholly owned subsidiary. It is always a wholly owned subsidiary company. Right? Wholly owned subsidiary company of a company. We say Companies Act, you are talking about joint venture company, wholly owned subsidiary company, dormant company. When you talk about wholly owned subsidiary company of a company only, no? Because see, that Companies Act is regulating the companies, then it's wholly owned subsidiaries or associates or joint ventures. Now, if a company is a wholly owned subsidiary of a body corporate, whatever the exemptions given under the Companies Act, according to me, are not available to that. Having said that, this is again an issue we can, I mean, I'm not going
Yeah,
to take it to discussion, but this may not be the right forum for that. So we
correct.
can park this question. And
Sure.
my view is this. It may be other different views. Suppose if you say we need to examine it further, we will do it offline. Okay.
So logically, I am also aligned. I have shared the same thought that to me, because for various reasons, because there will not be consolidated financial statements and other things available in the public domain in respect of this entity. And logically, the exemption should not be available because intention seems not for that purpose. No? So I agree with the,
So
but
what we
you
will do,
know,
Amit, I will take the liberty of giving some homework to Ashwini.
yeah,
Ashwini will do this thing. She will do some kind of a research. And
Sure.
definitely you have triggered a point. This is what exactly I said about Amit in the beginning itself. He always brings some kind of a googly like this, would provoke the professionals that, to take a deep dive into that. So Ashwini, let us examine this, and after that we will discuss with Amit also.
Yeah,
Okay.
just
Yeah.
one more point, Ashwini, because you mentioned about the applicability trigger also for the audit committee, which is flowing from the explanation in the rule 4.2 itself, right? Which I am again reading because this same explanation is used at 3 places in the Companies Act. Unfortunately, we are not able to dissect as to what is the right way to interpret this particular language. And the provision reads, I'm just reading from the book itself. The explanation says, for the purpose of this rule, it is hereby clarified that the paid up share capital or turnover or outstanding loan, debentures and deposits, as the case may be, as existing on the last date of the latest audited financial statement shall be taken into account. This is for determining as to what will be the paid up capital, turnover, outstanding loan, debentures, deposits. That is the parameters on which the applicability of audit committee or independent director is triggered. What is important is the language which says as existing on the last date of latest audited financial statement. How to interpret the term the last date of latest audited financial statement? So suppose we are in 2025. My latest audited financial statement is say available for 31st March 2024. 31st March is the last date of the latest audited financial statement. So will my applicability trigger will be basis the 31st March 2024? Or in this case, I'll have to see the applicability as on 31st March 2025. And Sudhakar sir, just to bring it to the notice, the same language appears in section 204, which is the trigger for the SEC audit also. Same language, no change. So same trigger for independent director, same trigger for audit committee, same trigger for the secretarial auditor appointment. It always is a dilemma whenever we talk with the professionals, whenever this kind of situation arises, especially in respect of debt. If a company on 31st of March has a particular threshold of debt touched, whether SEC audit becomes applicable on that company for FY 24-25 or it becomes applicable for 25-26. Similarly, whether audit committee becomes mandatory for 1st April 25 onward, or it will become for the subsequent year?
The answer
So
to your question is till the time the 31st March 25 audited accounts are available. Till such time, you will go with the audited accounts of 31st March 24 only. Wherever these threshold limits are getting triggered, because the latest audited financial statements available to you are 31st March 24 and you will go as per that only. Number one. Number two, the moment you got the 31st March 25 audited accounts are available to you, the constitution of the committee, you have to re-examine, you have to review that decision what you have taken. Because at one point of time, say for example, 2 months before when you examined it, that time the latest audited accounts available to you are 31st March 24. But 2 months after, when the audited accounts are available to you, the scenario changed. So that point of time, what you have to constitute the audit committee, you have to appoint independent directors and all that will come. Same is the case with 204 also. When you are examining this particular issue, maybe prior to September 25, you have to examine it as per your audited accounts available after 31st March 24. But that is not the end of it, The moment you got the latest audited financial statements are changed to 31st March 25, maybe in the month of October, you have to review the things, the decision what you have taken. Does I require secretarial audit? Of course, you require secretarial audit for the financial year 25-26. Immediately, you have to take the necessary measures to appoint the secretarial auditor at that point of time. And same is the case with the appointment of independent directors, other this thing. See, threshold limits, always whenever they refer to audited financial statement, whichever are available in your hand, you have to see that. Number one. Number two, there is always a contentious issue, which you also might be grappling with, that is, the moment auditor audited his accounts and gave you the audit report, can you call that as audited accounts? Or that audited accounts are to be adopted by the shareholders? That will be the audited accounts. Again, there are two views are there here. My view is when the shareholders adopt the accounts, those are the audited financial accounts available to you. Till such time, the auditor has audited it. But suppose if the shareholders tomorrow, they don't adopt the accounts, what will happen? Can you call them as your audited audited accounts? You cannot. But some people are taking a view that the moment auditor audits and give his report, that is the end of it, those are the audited accounts. But since this is, as I told you, it is a contentious issue, there is a scope for interpretation. And majority, this particular contentious issue is there not today. When I entered the profession, that point of time also the same issue was there.
Correct.
And still the issue is prolonging. This is not died or put to rest.
Yeah.
So again, the same thing, we will keep it aside, this particular issue also, then go ahead. Otherwise, Ashwini will not be able to continue with her presentation.
Just to add to what you mentioned, in fact, I remember SEBI, which was governing the BIFR, was very clearly specifying and giving a clarity that audited accounts means the accounts which are adopted, as you
Correct.
also mentioned. So I recall the discussion which we had in times of SEBI, which was giving a clarity ki your net worth erosion, 100% net worth erosion will be basis the adopted accounts, not the basis the audited accounts. Just
see why I brought this particular issue is only because about 2-3 weeks before only, one of the past presidents of our institute has called me and asked my view about this. I have given my view and I have given the rationale for that. He said, yeah, Sudhakar, all through I was of the same view, but again, one senior member of, he has given a legal opinion about this thing. That's why I'm asking you this question. I said legal opinions may be given. That is his opinion. He has given it as a legal opinion. But if you are asking our legal opinion, I would have given like this only.
correct.
Okay. That's why I thought I will bring it to the notice of the participants about that. Yes, Ashwini, please go ahead.
Amit and Sudhakar, one thing, as you rightly said, it is being an issue which is really to be examined. One more thing is also there. Although the general exemptions apply to wholly owned subsidiary companies, but however, since the US jurisdiction, what Amit actually mentioned, much will depend upon what is the status of that company, whether it is listed, unlisted, what is the jurisdiction status, what are the regulations they have there, whether they have similar to our SEBI rules, etc. All those things also required to be looked into because they will be consolidated in the accounts. In such a case, even those will also call for examination. That's what I think. Yeah.
All right.
Go ahead, Ashwin.
Someone has raised hand. Amit Buch. Do you want to take?
Yeah, let us see. I think couple of things have actually come here.
Shrini, go ahead with the presentation. We'll discuss that later, otherwise you will not be able to complete it.
Okay, sir.
Okay.
So, as we've seen the eligibility which flows from section 177, there is also a composition that is being talked about in section 177(2), which says that every audit committee shall have minimum of 3 directors. Independent director shall be forming majority of the audit committee, and the members of the audit committee shall have the ability to read and understand financial statement that has been given in Companies Act. Now, SEBI Regulation 18 talks about the composition in terms of that there shall be 3 minimum directors on an audit committee. At least 2/3 of the members must be independent directors. The chairperson shall be an independent director, and all members must be financially literate. At least one member must have accounting or related financial management expertise. And the company secretary shall act as a secretary to the audit committee. So we have seen what is the composition. We will see what are the key roles and responsibilities of an audit committee as per the Companies Act. Now, one is a recommendation for appointment, remuneration, and terms of appointment of auditors. Second is review and monitor auditors' independence and performance, and examination of financial statements and auditors' report. Next is approval or any subsequent modification of related party transactions. Now, when we see here, it is very clearly mentioned, one is the recommendation, one is review, and one is approval. But there is a major difference when we say there is a review to be taken by audit committee and there has to be an approval by the audit committee. So why I say that is because when it is review anything, it means that the audit committee has to examine, evaluate, or seek clarification from the auditor. Suppose in this case, they have to check the auditor's independence, then they will have to seek any clarification and raise concern if they have any on the independence of the auditor. So whatever decision they take in the terms of review mechanism would not be a final decision. The final decision still rests with the board only. So when they review financial quarterly statements before they are placed before the board. Now, when we talk about this, there is a limited responsibility that comes to the audit committee. However, a major responsibility comes upon the audit committee when it says that there has to be an approval. So the approval or any subsequent modification, for example, of related party transactions. So here the decision taken by the audit committee will have a binding effect. That means it will be a final decision-making authority in terms of any related party transaction. So power to accept or reject or modify any proposal will lie with the audit committee. It carries accountability and liability in terms of anything. So this is the difference when we talk about any review mechanism and approval under key roles and responsibilities of the audit committee. Secondly, it also has to scrutinize any intercorporate loans and investments and evaluate internal financial controls and risk management systems, monitoring the end use of funds that are raised through public offers, and valuation of undertaking or assets of the company wherever it is necessary. This has been stated under Companies Act, but there is also the terms of reference that we talk about, which is provided in Regulation 18 of LODR. Now here it talks about that the audit committee has to oversee the financial reporting and disclosures to ensure there is accuracy and credibility, recommend appointment, remuneration, and terms of statutory auditors. Obviously, they will evaluate the proposal that is being shared by the statutory auditors and recommend it to the board. They approve. Now here they can approve the fees for all non-audit services that are being provided by the statutory auditor, review and give their recommendation on the quarterly financial statements before it is submitted to the board. review utilization of issue proceeds and deviations with monitoring agency reports. They can also monitor auditor independence, performance, and audit effectiveness. Approve or modify related party transactions, scrutinize intercorporate loans. As Sudhakar sir initially said, that even the insider trading cases will be reported to the audit committee, and the audit committee can take decision on the penalty matrix and decision on the penalty matrix given under the insider trading code as well. Apart from that, obviously, they will evaluate the internal financial controls, risk management systems, review performance of the statutory internal auditors. As I have also said before, we are, even as a secretarial auditor, being invited to audit committee meetings where we are to present the audit report. And there are certain questions which are being asked by the audit committee. So this is also one of the roles which, though not specifically called out in LODR, but are still being done by the audit committee.
One more minute, Ashwini. Just got a minute. So here, monitor auditor independence, performance, and audit effectiveness. One question of late is coming is whether this monitor auditor independence means is only a statutory auditor or secretarial auditor also. So according to me, even the secretarial auditor's independence, their performance, their effectiveness is also to be monitored by the audit committee. Then the question comes about how about cost auditor? There is a difference between statutory audit, secretarial audit, and cost auditor. Cost auditor is not talking anything about, as such, about the compliances related issues, legal related issues and all. That report is entirely different. But majority of the companies, good company, definitely that cost auditor appointment also is reviewed by the audit committee. I don't think any audit committee is not reviewing the cost auditor. But I don't know why this question has come up. In fact, about a couple of months before, I think this question, when this appointment of secretarial auditors there for a period of 5 years and this amendment has come, that point of time, somebody asked me this question that now whether the secretarial auditor's independence or performance, etc., is also to be reviewed by the audit committee. I said, even otherwise also it was supposed to be done. Why this question is coming up now? Secretarial audit is again that it is talking about the compliances with not only Companies Act, with all the security laws. Equally important, if not more, it is equally important like a statutory audit. Statutory auditor talks about financials, integrity, etc. Financial integrity, financial transparency, controls, etc., is concerned with statutory audit. Whereas secretarial audit is concerned, it is completely about the compliance. Compliance with not only with the Companies Act, but also with all the security laws and other applicable laws also. So how can you say secretarial audit is not important? It is very much important. It is very much to be, in the audit committee's purview, it will come. It is, according to me, it is a mandatory obligation for the audit committee to monitor secretarial auditors' independence, etc. also. Now the question comes, how they will do it? See, saying this is very simple. Suppose if the audit committee member is asking you tomorrow, by how I have to monitor the auditor's independence, how I will do it? How can I monitor his performance? How can I monitor his audit effectiveness? So answer to that is, once in a while, audit committee members have to meet the statutory auditor without the presence of the executives. They have to meet them on one-to-one basis. They have to probe them whether they have any difficulties, whether they have any issues to be discussed with the audit committee. And that is an opportunity to be given. Of course, definitely there may be executive directors who are members of the audit committee. And same is the case with CFO also. The CFO, if he has to perform, say, company secretary's reporting now is made to the board of directors. Because CFO is presumed that he is anyway powerful position. May not be so. So CFO appointment is also one of the obligations of audit committee. They have to recommend the appointment of CFO. So according to me, it is their responsibility to also review the performance of CFO, because they are the people who have recommended that. And also whether the CFO, whether he is empowered to discharge his duties and responsibilities efficiently and effectively. That is also one of the audit committee's responsibility. So now audit, if I am the member of the audit committee, I should not confine myself what is mentioned, what is printed in the listing regulations or what is printed in the Companies Act. I have to go beyond that. Because this is the only committee, according to me, as far as the corporate governance is concerned, entire fulcrum go around this audit committee only. So sometimes audit committee has to take responsibility and accountability other than the things what has been mentioned also, because everything you will not mention in the charter. You have to go beyond that. You have to see that which are all the other related areas. Say, for example, if you talk about financial controls, unless until the CFO is empowered enough, how he will be able to initiate the financial controls, how he will be able to induct the good financial policies. So these are a few issues which audit committee members have to deliberate upon.
One
Yeah,
of our
Amit, go ahead.
one of our senior member, Jambunathan Mallikarjun, he has actually asked the question: how should the audit committee practically assess the external auditor independence beyond the statutory rotation requirement under the Companies Act or LODR regulations, moving more than the compliance to qualitative oversight? This is one question he has actually asked. And before that, I also would like to share with you all, Sudhagar and Amit. In fact, as you rightly said, in the company where we were working, we used to actually schedule at least twice in a year one full day audit committee meeting without the presence of other full-time directors, executive directors, and meet the external auditors, all the type of the auditors, cost auditors, secretarial auditor, and the statutory auditor. And not only that, even the people who are actually giving the outside, litigation issue, handling the things, etc., expert, all those things. We want the audit committee to directly listen from them and understand the issues. Ultimately, what is presented to them is actually coming rightly. That's what we used to do. But anyway, coming to Mallikarjun's question, how will you go beyond the requirement of the statutory auditors, requirement of the Companies Act? Here I ask Abhit and Sudhagar to share their thoughts.
So if I can share my thoughts, I think law itself has very clearly called out as to what is the eligibility, what is the qualification, what is the disqualification, and what are the services which are restricted in terms of 143, 144 of the Companies Act. Now, if a company is in a position to ensure an audit committee is able to vet it out, कि none of the statutory auditor services are falling in the prohibited services, because otherwise he is going to be not only barred, but he'll have to vacate, because he cannot continue those services. Like if he is providing some of the services which are a management function, which are restricted in terms of section 144, then he is not qualified to continue as a statutory auditor. I think even a company that does this much of diligence, that will be, to me, will be a sufficient compliance as far as the auditor's independence is concerned. There may be the other parameter what Sudhakar sir was indicating, but bare minimum I am saying ki at least, because this is the one of the biggest gray area, the auditor continues to provide the services which are prohibited in many of the cases. Billing is done in heading which are permitted under the 144 of the Companies Act. So audit committee certainly can review what kind of duties and what kind of assignments we have given to the statutory auditor from time to time, what kind of indulgence he is making in those discharge of duties. I think if that much is also ensured, we'll say that audit committee has done its role. Over to Sudhakar sir.
Yeah. See, according to me, how that audit committee will assess the external auditor's independence. This is what precisely I said that. Number one, in audit committee, at least one or two members should be professionally qualified, so that they have the expertise to read the financial statements. When I read the financial statements and when I talk to the auditor concerned, I also have said that audit committee has to meet the auditors, statutory auditors or secretarial auditors once in a while without the presence of executives. Of course, one may say that, sir, executive director is member of the audit committee, he should be there, no problem. And then as audit committee member, if I am an audit committee member of a company, I will interact with the auditor and I will put him some questions. Say, for example, that in the notes to account, there is a huge contingent liabilities are there. Suppose if the contingent liabilities become a liability, it may affect the going concern concept also. I may question the statute auditor, but what is your view on this? Like that, when based on the entries in the transaction, based on the transactions in the financial statements, I can put some questions to the statutory auditor based on the replies what he is giving. I can always assess about his performance. Is it up to the mark or not up to the mark? If he is fumbling, means his independence is at stake. He is not independent enough, because if he is looking at the executive or director, when I am putting a question to him, obviously it means that he is not comfortable. So now the question comes, can the chairman of the audit committee can meet the statutory auditor on one-to-one basis? Yes, by all means. Because the responsibility of the chairman of the audit committee is a stake above than the members of the audit committee. So I am within my prerogative, within my jurisdiction to meet the statutory auditor. Nobody can question me by why you are meeting on one-to-one basis. See, just like, your board evaluation sheets, you will be giving it to the chairman of the company. And the chairman can call the directors and can tell them definitely where are all the gaps are there, where are all the improvements they have to bring in. They cannot say, "But you are also a director like me, how you are saying this thing?" Because he is the chairman of the company. So the role differs. Same is the case with audit committee. And this is very essential. And I'm telling you, let me also say that I have interacted with some audit committee chairmen who are on the top 50 listed companies. They are very tough people, very, very tough people. Because the company secretaries tell me, sir, हमारा जो audit committee का जो chairman है फाड़ देता, मतलब pardon my language, but virtually they say, sir, फाड़ देता है वो. And they really from what shiver before going to the audit committee chairman. We do require that kind of people. That audit committee chairman is having a sadistic pleasure or something like that. That is very, very essential. You need to have a tough, strong audit committee. That is what exactly NEFRA chairman recently, he in one of the forums he was addressing. He said exactly the same thing. Audit committee has a greater responsibility. They have to be strong enough. They have to come with their report properly, which is not happening. That's what NEFRA chairman has said. Yes, Ashwini.
Narayan Sharma is asking a question. It is observed that the same independent director is appointed as the independent director, many of the group companies, and in that committee, while the significant contribution of the income of the particular ID is coming from the same group to the real independent, although technically he meet the criteria of the requirement, etc., and other thing, whether the same case is actually with the auditors. That's what he is asking.
Sir, my answer to this question is that independence is a perception. If I am the independent director of the group companies, I am the independent director of a what's called as parent listed company and other companies also. When I am wearing different hats, I am supposed to conduct myself differently. I might be conducting, but people might not be perceiving so. That's a different thing altogether. You cannot say that wholly owned subsidiary company is accustomed to act as per the instructions of the holding company. Unless until it is established, the person who is making the delegation, he has to establish it. Same is the case here also. I may be the audit committee member, independent director of the listed parent company, and I may be a audit committee, the independent director for its subsidiaries also. In fact, listing regulations have envisaged and made a mandate that the independent director of the listed entity, or at least one of the independent director of the listed entity, should be there on the board of the material subsidiary company of the listed entity. Why? Because it is always better. In fact, when the independent director of the listed entity is also independent director of subsidiary companies, it is better so that he can what's called as see the things holistically. That's what my view. Amit.
Yeah, absolutely. I agree. There is no doubt about that. law does not create any distinction regarding the same, and it does not stop. And as you rightly mentioned, that it is a perception. So if we don't believe and things are actually not in the independent manner carried out, then whether it is in respect of one company or it is in respect of more than one company within the same group, it really does not matter. So perception is really a test which has to be made, and it is by virtue of his own conduct also. We have to observe whether the person is performing in an independent manner or not. That something which has not been prohibited by law, we can't say that just because he may be indirectly be benefited by virtue of being independent director or as a statutory auditor in couple of other group companies or subsidiary company, he should be disqualified. I don't think that there is any logic or reason behind that. So generally we cannot put a restriction on the same unless and until by conduct it is established that the intent seems to be somewhere mistaken. Just to add one more point, since Sudhakar sir was mentioning about the presence of a executive director, that also comes as a question, and many a times in the professional interaction, people ask a question: is it okay to be having a executive director or maybe a managing director or a director finance as a member of the audit committee, while meeting the criteria of independence, while meeting the requirement of constitution of audit committee? Can we have a executive director on the audit committee? To me, certainly there is no bar, no restriction, and there is no governance issue also as far as executive director being on the audit committee is concerned. The view what I am having, even having a managing director or executive director at times helps the independent director, because they are, in any which case, they are non-executive. They are not into the day-to-day affair. The thing that they are grappling with while making a discussion may be very well clarified by the executive director who is present during that particular meeting. For all important matters, including related party transactions, in any case, the law has mandated that these will be approved by the independent directors only. So I don't see that should there be any restriction or any challenge with regard to having. But yes, we may hear the views of the other panelists also, because this issue keeps coming to us, and as a SEC auditor also, this issue is being asked by audit committee chairperson also in forum from time to time. Another issue also which pertains is with regard to the financial literacy of members of audit committee and expertise, where it says that certain number of members should be having the financial literacy, and there should be a person who should have the expertise also. At times, people are asking a question: expertise can come only with the professional qualification. If I very well recall that in one of the audit committee, the chairman was not professionally qualified, and the questions were raised with regard to his capability, while he was all through in the industry for the last 20 years working as a finance professional. So can we say by virtue of experience somebody can create the expertise? To me, answer is yes, but I would love to hear from the other panelists as well if they have any other thought on the same.
In fact, I fully agree with you, Amit, as far as the executive director's role in the audit committee is concerned. In fact, it is very much essential that executive directors ought to be there in the committees, both constituted committees. Say, if you see the NRC, though section 178 says NRC members are to be non-executive directors, but they gave a carve out for the chairman of the company to be a member of the NRC, whether he is an executive or non-executive. Only thing is he cannot chair that NRC. That's it. The reason being, when NRC is discharging certain responsibilities, the chairman of the company has to be in sync with that. The same is the case with audit committee also. The executive directors ought to be there on the audit committee so that the other independent directors who are not in the executive role, they might not be having in-depth knowledge of the operations of the company. Sometimes the if the executive directors are not there, they may be taken for a ride also. If the
Correct.
executive director is there, he will be able to understand the situation, and then he can control the situation wherever it is so required. At the same point of time, now the question comes, can the independent directors ask the executive director to recuse them on certain issues? By all means, they can make a request. It is up to the executive director to accept it or not to accept it. If you are having a harmonious relationship among the board members, no executive director will feel when the other independent directors are asking him for a 10 minutes time, they want to discuss certain things among themselves. Why not? Act itself has envisaged an independent directors meeting without the presence of executive directors or the executives of the company. So same is the case here also. And listing regulations also envisaged that independent directors have to meet once in a while. I mean, the independent directors or the members of the audit committee also have to meet once in a while among themselves. Okay, so I don't think any issue is there as far as this is concerned. Yeah.
Correct.
Sudhakar, actually, Sanjay Agarwal has put a question. How do you actually determine that the chairman is actually a financial literate? I have worked in the 3 listed companies. The chairmen were never financially literate, but as a company secretary, I could not do anything as it was the order of the promoters who also is in the CMD.
See, this is what exactly I said, Sanjay, that in the beginning itself, I said a time has come now, SEBI has to mandate professional qualification for the chairman of the audit committee, if not for the audit committee members also. It has to say that definitely chairman of the audit committee is to be professionally qualified, and you give the professional qualifications there. Not necessarily he is to be a chartered accountant. He may be a company secretary. He may be a cost accountant. But some kind of professional professional degree is required. In addition to that, they may say that it is also advisable or recommendable, whatever it may be, that 1 or 2 members of the audit committee are also to be professionally qualified. What will happen is, because if you mandate everything, that may be very harsh for some medium-sized or small companies. Then you say top 1,000 listed entities. But this is the rule for top 1,000 listed entities. Otherwise, this is what is going to happen. That some promoters may not want strong audit committees. Then they will say that audit committee is for the compliance exercise only. And sometimes, the independent directors, they are not able to even appreciate what is the related party transaction. It is good or bad also, they don't know. This kind of situations are there. Yeah.
Ashwini, please go ahead. We are already at 12 o'clock.
Yes,
Yeah,
yes,
Ashwini.
yes.
Ashwini, what I suggest is that wherever the issues are not very complicated, you may skip out also. Say, for example, the 3 directors are to be there on the audit committee. Everybody knows that. Certain issues, you just provoke us, and then you can just watch it for that.
Okay, sir.
Yeah.
So the key roles and responsibility we have discussed under Companies Act, but the terms of reference, as we call it, under SEBI LODR is also very clearly stating that audit committee shall discuss significant internal audit findings and follow-up, review internal investigations on suspected frauds or major control failures. They have to discuss the audit scope, pre-audit and concerns of post-audit with the statutory auditors, examine reasons for major defaults in payments to stakeholders or creditors, review the functioning of the whistleblower mechanism, approve the appointment of the CFO after evaluating qualifications and background, perform any additional function as per the terms of reference of the audit committee, review utilization of loans, advances, investments by holding company in subsidiaries which are crossing 100 crore or 10% of subsidiary assets. Further examine rationale, cost benefit, and shareholder impact of demerger, merger, amalgamation schemes. The review of annual financial statements and audit report with the management before taking it to the board for their approval. The audit committee is also expected to check the director's responsibility statement disclosures under the section 134(3)(c), review changes in accounting policies and reasons, review major estimates and judgments in accounts, review significant audit adjustments, ensure compliance with listing norms and legal requirements, review disclosure of related party transactions, and review audit report modification and qualification. We'll be talking about the related party transactions disclosure in the later slides. Further, they will also have to review the management discussion and analysis on financial condition and operating results, review statutory auditors' management letters and internal control weakness notes, internal audit reports on control weaknesses, review the appointment, removal, and remuneration terms of the internal auditor, review deviation statements that is required under Regulation 32, that is the quarterly deviation statement and monitoring agency report, and the annual statement on funds used for purposes other than those stated in offer documents. Sir,
Yeah,
we discussed.
Here I would like to say that so far what we have seen, both under the Companies Act as well as under the listing regulation, the terms of reference, if you see, it is very huge. Now, please, as a compliance officer, we have to ensure that whatever the terms of reference is there during the financial year, the audit committee has to review or at least all the terms of whatever they have been mentioned. And suppose, say, for example, tomorrow, if anybody comes for an inspection or investigation, they may say by certain issues which are not there as part of the minutes. They may say why they have not reviewed this. Suppose there is a review is there, there is approval is there. Wherever approvals are there, anyway, you will be taking that. But wherever reviews are there, I'll be taking that is a question mark. So for that, what you can do is that in Reliance, what we used to have every year in the beginning of the year, we used to prepare a kind of flow. I mean, okay, that which quarter audit committee will do what, apart from the routine functions of the audit committee. For example, quarterly financial, the routine activities are there. Apart from the routine, what is the other thing during that particular quarter the audit committee is supposed to do it? Every quarter we used to have that. And in all the 4 quarters, we used to cross-check with the terms of reference as per the Act, as per the listing regulations. Are we completed everything or not? That is very much required. Otherwise, what will happen is, it may so happen that certain areas they might not be reviewing or even looking at also. So audit committee members, if any of the participants are directors on boards or the members of audit committee, they have to ensure this. During a financial year, whatever the terms of reference is there, they have looked into all aspects without any fail. Yeah.
Further, there is the audit committee is also expected to have an oversight role in terms of visual mechanism, wherein the audit committee is responsible for monitoring the functioning and effectiveness of the visual mechanism and the whistleblower policy of the company. With vigil mechanism, they have to provide direct access to the chairperson of the audit committee in appropriate or exceptional cases. And audit committee also has to ensure that there are adequate safeguards against victimization of any director, employee, or others who are using this mechanism. Further, if there is any conflict of interest with any audit committee member, they must recuse and remaining members must handle the matter. Serious or escalated whistleblower complaints are reviewed and addressed by the audit committee. The committee ensures that there is a fair, confidential, and independent investigation of reported concerns, and the internal auditor or visual officer periodically reports summary of the whistleblower complaints to audit committee, that is the nature, status, or action taken. Further, audit committee may take suitable disciplinary action against repeated frivolous whistleblower complaints, and also has to ensure that the company discloses existence of vigil mechanism on website and in the board's report as required.
Here also, the audit committee members have to see that vigil mechanism, whether it is functioning properly or not. Suppose, say, for example, a medium-sized listed company or a big-sized listed company has no complaints at all. means something is wrong with that whistle mechanism or whistleblower policy itself. How can it be there is no complaints at all? Or too many complaints are there also, then it is a problem. So audit committee has to look into this particular aspect. At least once in a year, they have to review the whistle mechanism, how it is efficiently it is functioning or not functioning, any complaints are received. Sometimes the management may say, sir, we have received some frivolous complaints only, we have not brought to your notice. No. Then it is the responsibility of the audit committee to see what are those frivolous complaints. Suppose some devices are very trivial complaints are there. Because the trivial complaints today, they say, you say that today's whisperings, maybe tomorrow screams. So you have to see that any whisperings are there. That is also the audit. See, this is what exactly the audit committee has to see. Don't do what is written. Sometimes we may have to do something more than what is written in the law. Yeah.
Further, Section 177 clearly mandates that audit committee must approve all related party transactions and any subsequent modifications. For non-Section 188 transactions, if audit committee, that means where the transactions are with related parties but do not fall under 188, the audit committee does not approve, it must provide recommendation to the board. Further, ratification is allowed for transactions less than 1 crore entered without prior audit committee approval, and if not ratified within 3 months, shall be voidable at the audit committee's option. Concerned director must indemnify the company. Rule 6A also of company's meeting of board and its powers also say that audit committee may grant omnibus approval for repetitive RPTs. So regulation 23 here clearly, we have talked about 177, but regulation 23 clearly states that prior approval of audit committee shall be required for all RPTs and material modification. Here only independent directors on audit committee have to approve the related party transactions. Audit committee also has the role of defining material modifications in the RPT policy of the company. Further, it must approve related party transactions of subsidiaries even if the listed entity is not a party. Now, when thresholds are triggered. Now, the thresholds as per the latest amendment of SEBI is 10% of the standalone turnover of subsidiary or material RPT thresholds as applicable to the holding company. So if they are triggered, then the audit committee must also approve the related party transactions of its subsidiaries. Further, ratification is permitted up to 1 crore subject to certain conditions as we have discussed earlier. Regulation 23 and Rule 6A define which companies require omnibus approval, what is the eligibility and purpose. So audit committee may grant omnibus approval for such related party transactions that are repetitive, that are regular in nature or cannot be foreseen in advance. So enable efficient approval of frequent operational transactions while ensuring compliance and oversight. So it should not happen that there is no approval being taken, but omnibus approval will ensure that approval is there for any transaction with related party throughout the year. The factors the audit committee in this sense should take into consideration is the repetitiveness of the transactions. That is, you can see from the past or which can be anticipated in future. What is the justification and rationale for omnibus approval? And whether the omnibus approval is in the best interest of the company and protects its minority shareholders. Now, the subsidiary RPTs that come, whether omnibus approval is needed for transactions entered by subsidiaries.
One thing, actually go back to the previous slide, please. See here in the omnibus approval, what they say is the transactions which can't be foreseen in advance, up to 1 crore rupees per transaction, they can give that omnibus approval. So several times it happens that people take it as a birthright that they can do this thing under this particular what's called as this kind of a unforeseen this thing. But please remember that the transaction cannot be unforeseen means if any transactions you can foresee, that you cannot put it here. So you have to establish that if I am an audit committee member, I have to ask the management, have they entered into any transactions which are not unforeseen transactions, this thing where they have given the permission. At every audit committee meeting, when they are reviewing the omnibus approval, they have to ask this question. If they say that, which are those transactions which they could not foresee? If it is a foreseeable transaction, they are not supposed to do this under this particular shade. And tomorrow, even a regulator may also object to this thing. By this transaction could foresee. Why you could not foresee? For example, purchase of raw material. You have taken a limit and the limit is exhausted and you are negligent enough. You have not got the limit enhanced. And now you are putting that purchase of raw material into unforeseen transaction. How can you say it is an unforeseen transaction? Or availing any services? Similarly, that ratification by the audit committee. Recently, another thing has come up is that if the audit committee is not ratifying a transaction, they said, no, we will not ratify this transaction. Can the board ratify the transaction? I mean, this is a very interesting scenario. Audit committee is not approving a transaction, whether board can approve. Audit committee is not ratifying a transaction, can the board approve? Can the board ratify the transaction? I have some views, but before that, I would like to listen to you, Amit.
Yeah, means it is quite possible that in my view, means audit committee may give a view that the transactions which have been done and now are put for the ratification, we don't approve those transactions. In any which case, the constitution of audit committee is created in such a manner that it is a committee of the board. Power ultimately lies with the board of directors in terms of provisions of section 179 read with section 177 in terms of constitution read with regulation 18. Now question comes, if audit committee has rejected the ratification of a particular related party transaction, board has to record the reasons in writing as to why they are superseding the recommendation and approvals of a audit committee and why they are going ahead with the approval. And in fact, in the board of directors report also in 134, they'll have to record the reasons as to the instances in which circumstances in which they are overruling the recommendations of the audit committee. It is possible, but question will always be as to what compelled. Either things were not explained to the audit committee in the right perspective, or they have given their view with the conscious consideration that this transaction is certainly not in the interest of the company, and this transaction is, as mentioned in the 177 also, is voidable at the option. So if it is becoming voidable, then that means the consequences can follow. Now, what could be the circumstances in which the board of director will be making overriding power? Those may be only those limited circumstances where audit committee perhaps could not appreciate the 360-degree view, like business view. At times, it may happen that audit committee is not privy to the entire facts and the circumstances in which the transaction took place. And board, while considering that, was fully aware as to what compelled the company to undertake that transaction. So technically, to me, by having such kind of scenario and by recording that reason in writing in the...
So here, Amit, there are, as I mentioned, there are two things. I think Amit got frozen, I think.
Yeah, that's
So
right.
there are two things here. One is that audit committee has not approved a transaction. Whether the board can approve that, by all means it can, because it is a broader forum. If the audit committee is not approving the transaction, board can approve the transaction, but in the director's report, they have to give that the reasons why that audit committee's the view has not been taken into account, and that is there. As far as ratification is concerned, technically ratification can be done only by the authority which can approve the transaction. Suppose audit committee has to approve the transaction, and what they did was that without the approval of the audit committee, they did some transaction. Now audit committee say, I won't ratify this transaction. They got a ratification power, but they said, no, we don't ratify this. Now, board cannot say, I will ratify the transaction which the audit committee is not ratifying it, because board doesn't have that power. Ratification means that only the authority which has the power to approve the transaction, they can ratify that. What the board has to do is, board has to consider that as a fresh case and they have to approve the transaction, but they cannot ratify the transaction. This is the thin line of difference between ratification and approval. Yeah.
Sir, I have just one small point to it. I'm just thinking, I heard out what you mentioned. Your point is coming from the point that audit committee only has the power to ratify. I'm just asking a question to myself. Can audit committee refuse to approve any particular transaction?
Approve any?
177 proviso 2 very clearly says the transactions other than transactions covered in 188 will be in the jurisdiction of audit committee to not approve and only recommend. Now I'm just thinking if that is the case, if the transaction pertains to the items not covered in 188, certainly it can only make a recommendation. Then that means they have a power not to approve the transaction as well. So they have a power not to ratify the transaction as well. If that is the case, in that case, the ratification, if rejected by the audit committee, can logically be also be considered by the larger forum, which is the board of directors. Because in the case in which the transaction otherwise has been recommended by the board of by the audit committee, will be considered by the board of directors for their approval. If that is possible, then ratification should also be logically be possible. I'm just going with the provisions of section 177 proviso 2.
Okay, that if you remember that this issue has come up when we were drafting the guidance note on RPT. Subsequently, when we revised the guidance note, also this issue has come up.
Correct.
And we addressed this issue in the guidance note to some extent and left it there because the views were different as far as this particular issue is concerned. This is again another contentious issue, which is still that is lingering on. So at the time when we were drafting the guidance note at the first time, subsequent revision when it has taken up, also that the same issue has come up. Again, divided opinion was there. It has been left like that only. Okay.
Yeah,
I think we will again same thing. This is a contentious issue, so let us park it after. No, we cannot. You and me, we cannot discuss it here now. Yeah. Yes, Ashwani, go ahead.
So, Sudhakar, one thought comes to my mind actually. When the audit committee actually says it doesn't approve it, it goes to the board. Board has got the power to approve because of the larger forum. There will be some of the members who are in the audit committee also. They will be also the part of the board. And suddenly, how the stand will change from not approval to approval status will be
Bala, that issue I can answer it very well. I have answered this at several forums also. See, as an audit committee member, when I am examining a particular issue, the available wisdom is only 3 to 4 members only, not beyond that. And when the audit committee is not satisfied with that, either it may not approve the transaction or alternately it may refer the transaction to the board. Certain things they have to take, they cannot just refer to the board. They have to take a stand, approve or not approve. So what happened is when that same matter is being considered by the board of directors, that point of time, number one, the discussions what are taken place might have given me certain clarifications. Or I might have appreciated the discussions based on which I am changing my opinion. Similarly, sometimes it may show also the amount when that audit committee has not approved the transaction. Before the board, when the issue has come up, the CEO, who might not be present at the time of that audit committee meeting, he might have come to know about this thing and immediately he rushed to the board meeting and then he has given certain clarifications. So as an audit committee member, I might not have approved a transaction, but when I'm participating in the board as a board member, I can always change my view based on the information, based on the discussions, based on the wisdom I have gained it. I can do that. Not an issue at all.
Certainly, I agree.
Yeah.
Okay, Ashwini, go ahead.
Yeah, Ashwini, go ahead.
Yes. So for the omnibus approval, there is certain criteria that is given under Regulation 23. So the same is that maximum aggregate value of transactions permitted under omnibus route per financial year. What is the maximum value per transaction that will be allowed? The type or nature of transaction eligible for omnibus approval. Disclosure requirements at the time of seeking omnibus approval. What is the nature, parties, commercial terms, pricing basis, etc. Pricing safeguards and basis for determining arm's length. So most of the times we see that audit committee seeks a third party report on arm's length pricing and for the criteria that are mentioned under Regulation 23, how they will, the reporting is taken from a third party stating whether this transaction that they are entering into is a related party transaction, but done at arm's length. So there is also a review and frequency monitoring mechanism that is quarterly. They will keep on reviewing what approvals they have given at the start of the year. Periodic review that we call for all the approved RPTs till date. Then transactions that are prohibited for omnibus approval, that is one-time transaction if any happening, then that will not be considered under omnibus approval. Further definition of material modification for ongoing omnibus transactions is also one of the criteria placed for before the audit committee. So should I go through this or?
Not, I think that anyway, this is not an RPT, this thing as such. So only relevant portion of audit committee do it, otherwise not required.
Okay. I'll just highlight one point. When there is an alignment between Companies Act 2013 and LODR regulations, Companies Act Section 177, prior audit committee approval is required. Similar, it is given in the LODR regulations as well. Under Companies Act, if it's SEBI regulations are not applicable, all audit committee members can approve a related party transaction, whereas under SEBI, only independent directors can approve RPT. For omnibus approval, there is a detailed conditions that is mentioned in under Rule 6A, whereas it is permitted with SEBI specified conditions as we have discussed earlier. Subsidiary RPT approval is not covered under Companies Act, but specifically given under LODR Regulation 23(2). Materiality for shareholder approval is stated under Section 188 only, not given in 177. And obviously in LODR, it is very clearly defined with the latest amendment also coming in November. We'll talk about the case laws now. I have bifurcated between two things, SEBI case laws and ROC case laws. So first we'll talk about a SEBI case law, whereas SEBI has passed an order against a listed company for overstating revenue and profit through a series of MOUs which they entered with a related or a group entity. Now, these transactions were shown as genuine sales, even though the actual cash inflows were negligible, leading to material misstatement of financials over multiple years. Now, SEBI has held the independent directors responsible and said that they have failed to exercise adequate due diligence, questioning the substance of related party transactions, and ensuring that the financial statements were correct and credible. SEBI imposed monetary penalties of 59 lakhs on the audit committee members, specifically for their oversight failure, emphasizing that audit committee members carry personal responsibility and passive approval of financials is not acceptable. Senior finance officials were also penalized for giving incorrect, true and fair view certifications. The company and promoters faced wider action for misleading disclosures, but audit committee liability was highlighted separately. SEBI also issued an order against another listed entity where two audit committee members, the audit committee chair and an audit committee member, were held liable under Regulation 18(3) and Part C of Schedule 2 of SEBI LODR to perform certain audit committee duties. SEBI found that Audit Committee failed to detect or question major financial irregularities, fictitious business transactions, diversion of company funds, undisclosed related party transactions, unreasonable asset write-offs, and lack of documentation supporting key asset financial entries. SEBI concluded that Audit Committee members did not exercise independent judgment, due diligence, or oversight expected under LODR regulations, enabling financial misstatements to go unchecked. Both Audit Committee members were fined 25 lakh each for their oversight failures. There are few ROC case laws which I would like to present. One is of Resonance EduVentures Limited, where the Audit Committee was not constituted for a certain period between 19th of November 2019 to 15th of April 2021, resulting in a continuous breach of mandatory corporate governance provisions. The company voluntarily disclosed the non-compliance by filing an adjudication application with the ROC Jaipur, while they demonstrated transparency and cooperation. ROC has clarified that voluntary disclosure does not absolve statutory liability, especially where the requirement is mandatory and default is substantive in nature. Here, the penalty that was imposed was 5 lakh on the company and 1 lakh on each was imposed on the managing director and CEO and the company secretary, emphasizing personal accountability of KMPs for governance failures. The case reinforced that constitution of Audit Committee is a governance obligation, not a procedural formality. Second case is of Khed Developers ROC Pune. The nature of default was again the same. The company failed to constitute an audit committee as mandated under Section 177. Obligation was clear and unconditional, and default related to a core governance requirement. Company here also voluntarily disclosed the non-compliance by filing an adjudication application with ROC Pune. However, the same stance was taken as in the previous case, and total penalty that was imposed was 12 lakhs, comprising 5 lakh on the company and 7 lakh collectively on the directors and KMPs, that is the CEO and CS, at 1 lakh each. Personal liability was also affirmed. Another case law was of Gordon Herbert India Limited, ROC Kanpur, again, which failed to constitute an audit committee in the year 2014-15 and 15-16 in violation of Section 177. Here, in this case, there was no suo motu application, but the ROC Kanpur had initiated adjudication. The company and its directors failed to adequately respond to this notice. Here, the penalty and liability that was imposed on the company was 8 lakh, 5 lakh on the company and 1 lakh each on the 3 directors. Directors were required to pay penalties from the personal funds with appeal available within 60 days. So we can see that even the regulator is taking a clear stance for non-compliance under 177 for constitution of audit committee. With this, I end my presentation and we can take questions.
Thanks, Ashwini. So nicely you brought out the subject. Very lucidly you presented all the facts. My appreciation to you. Let us move to the question answers. Two companies required to place a minimum information as per the industry standard before the audit committee for quarterly review RPT already approved by the audit committee.
No. For review, you are not required to place any minimum standard. So say you have already taken the approval in the first quarter. Now for the next 3 quarters, you are placing the information for review at the time of review agenda. You are not required to place the minimum information. It is only at the time when you are seeking approval of audit committee, the minimum information as per industry standard is required to be followed.
And it is very clearly also mentioned that it is only for approval and not review. It is in the notes also. Correct. It is mentioned.
In one company, internal auditor reported that quarterly on physical certification and found it was a consideration amount. This was a considerable amount. This was actually referred to the audit committee, but no outcome was received from them. Now, what action should be statutory auditor have to take?
So the point is that internal auditor has reported short quantities on the physical verification. Maybe there are a lot of permutation combination. Maybe the internal auditor later dropped the query because he got satisfied with the replies what the management has given as to why there were short supplies. So statutory auditor need not take any cognizance of such report. But if it is not resolved, say internal auditor has given the observation and statutory auditor is ignoring the same, audit committee has a role to play. In that case, audit committee can definitely ask a question to the statutory auditor why such kind of consideration has not been given to the observation of the internal auditor. But quite possible, it is not clear from the question whether that issue got resolved or not. But if it was not resolved, then audit committee can certainly ask on one-on-one basis to the statutory auditor. So you are perhaps on mute.
How should the audit committee particularly examine the external auditor's independence beyond the statutory rotation? This I think we discussed. It's answered by Sudhakar very well actually. It would be more effective when outstanding loans and borrowings exceed rupees 50 crores instead of based on the last audited financial statement. Sometimes the limit exceeds during the year, but at the last day, on the period, at the financial period, it may be less than the 50 crores.
Yeah, it is just his observation. Means the limits are limit what the statutory framework has provided today. We have to abide by those things. I think his view may be correct on one particular context, but as far as the present law is concerned, we have to follow in line
IC and technology. Given the rise of the cyber and digital risk, how are the audit committee actually expected to extend their ICFR oversight on the technology-driven controls without duplicating the risk committee's remit? More so overlap topic between the audit committee and the risk management committee.
So I think audit committee is a financial architect of a business of a company. It has to understand from where the requirement of indent is coming, where the requirement of raw material is coming, how it is getting processed within the company, how it is sold to the outside market, and how the proceeds are realized. So from payment of money to realization of the money, I think is the entire responsibility. Now, this may be further complicated by virtue of use of technology, which has started nowadays in each and every business. Your entire accounting function, your entire business function, your entire marketing function, all that may be automated. Now, wherever you feel like there are gaps in terms of control, in terms of cyber attack possibility, I think the audit committee has to flag those gaps and get it executive order issued so that these gaps are fulfilled over a period of time. Leakages are not possible in those cases. So I think while performing the role as a financial architect, it always has a oversight of internal financial control as well as the cyber security aspect as well, wherever cyber security aspect are likely to create any risk to the organization. It goes without saying to me that it will have definitely a role, and it has to align, it has to merge the concept of cyber security along with the business and the internal financial controls.
Need a combined refresher training for the board effectiveness to the PSU boards, especially energy sector, like coal, and your coaching should like a board at greater height. You are actually doing the exceptionally well over every week. I am attending. Please discuss the topic of the 35 minutes and the audit committee, same way it is. So somebody has given appreciation to Sudhakar, I believe here.
Yeah.
Can the power to invest the funds of the company be delegated to the board or a subcommittee oversight of the WTD of one independent director?
See, I think this question pertains to section 186 subsection 5. As far as 186(5) is concerned, it is very unique provision where you are required to take the consent of all the directors. This matter, that means the agenda to give a loan, agenda to make investment, agenda to make guarantee, agenda to make security for other companies has to be mandatorily taken at a board meeting. This function principally cannot be delegated. I cannot delegate that function to any committee, whether it is audit committee or to any individual director, whosoever it may be independent or non-independent.
Company has approved.
What practically companies are doing, I know it is a challenge, Sudhakar sir will agree to it. When we know, say we have got 10 subsidiary company and 5 wholly owned subsidiary, and I have to provide loan and investment from time to time to these 15 companies. In the beginning of the year, I will pass one resolution specifying the limit that up to 100 crore I will provide to company A, up to 100 crore I will provide to company B, and likewise we'll provide for each and every company, and then we will use the power of section 179 and delegate that power to a committee, whether it is finance committee or whether it is any other committee, to discharge that function. But prima facie, you cannot give a blanket delegation to any committee or to any person. This function has to be performed by the board of director, and power is so that even one single director says no or dissent to the proposal, this resolution cannot be passed.
So that is basically what you are saying, it lay down the limit, and within that limit you delegate the power for the disbursement to the other subcommittee.
It has to be with terms and condition, with name of the entity and the purpose for which you are granting the loan. Without that, 186 is not delegatable function.
I think it's a practical approach. Yeah. Company has approved the RPT for the lease land for 27 years for solar project set up at that time when the company was actually private limited. After 2 years, now the company converted the public limited company and will go to IPO. Do it require to ratify the transaction?
So the transaction is like company has gone for a long-term lease with a related party transaction, and now company has, say, gone for IPO, and maybe another 25 years term is still remaining. Whether company should go for seeking shareholder approval, I believe this is a material related party transaction, and it envisages the approval of shareholder if the transaction was done today, or it was done in past also, it was taken with the approval of the shareholder. So legally speaking, you are not required to take any approval of the shareholder, neither any regulation 23 mandates so, and neither that is the expectation of a regulator also. We have been involved in multiple public issues as well, and we have seen that even the approval document from the stock exchange and the SEBI does not mandate you. But from the governance aspect, if somebody asks me, I will say the approval that you have taken earlier was your internal approval, where promoters were allowed to vote and they have voted for approval of these transactions. When it comes to regulation 23(4), where all related parties are restricted to vote, it will always be in the governance that you place the agenda again before the shareholder and take the approval. But you always run with the risk that What if the shareholder approval is not received? In that case, you will have to abort the transaction. You cannot continue with that particular transaction. So that is the risk. I think maybe we can have a views of Sudhakar sir as to what will be the right way to deal with this situation. Legally, I'm very clear that law does not mandate you.
If I am not wrong, Regulation 23, Sub-Regulation 8, I think, if I am not wrong, that says if any related party transaction, which is a continuous transaction, but if it triggers material related party transaction, then it has to be approved by the shareholders. Okay. So in this particular case, though this related party transaction was approved by the unlisted company, despite the fact it has given all the details in the prospectus, but if it is a material related party transaction, according to me, the company has to obtain the shareholders' approval. Only thing what will happen is in this case, shareholders' approval cannot be obtained a prior approval because it is already a continuous transaction. So may not be a prior approval is required, but certainly it has to be put up to shareholders for their approval. Otherwise, this transaction may be challenged.
Whether the appointment of the secretarial auditor needs to be recommended by the audit committee.
Bala sir.
Yeah.
I was just, Sudhakar sir was mentioning about 23.8. So 23.8, if I understand correctly, was one-time provision when this notification was issued. That is 23 regulation was notified. What it says that all existing material related party contract or arrangement entered into prior to the date of notification of these regulations and which may continue beyond such date shall be placed before the shareholder in the first general meeting subsequent to notification of these regulations. So say these regulations were notified on 2nd of September 2015 and your transaction was approved on 1st of April 2015 and it is a material related party transaction. It will be required to be placed within first annual general meeting for the approval. Now, question, because why I am raising this issue? Because this question keeps coming whenever any new amendment is coming into the LODR and a new requirement arises. The same provision came into discussion when in April 2024 a new change regime was notified. Similarly, the questions were asked in the professional fraternity whether these transactions will require reapproval. So I just wanted to validate the understanding, though my understanding is that these transactions which are specifically falling in 23.8 will be required, and in any case this is the eclipse provision. This is the provision which has already now been over because first AGM from the date of notification is already over. Now you cannot take shelter of this particular notification to put a condition that now every such transaction after IPO will be requiring the approval. I'm technically wanting to understand. To me,
but I have one view over this. The materiality before IPO would be Companies Act, and materiality after IPO would be Regulation 23. So I don't think, as per 23, the company must have taken approval. So whichever approvals have been taken pre-IPO but hit the materiality will now have to be taken post-IPO is my view.
Ashwini, point is that my transaction has already, it is a, see, problem is that many times we don't understand how the commercial world works. Business transaction has to be understood in a business sense only, right? I have agreed, this is a transaction where I have taken a land on lease for putting up a solar project. Maybe I have invested 100 crore rupees on the land that I have taken. What if shareholder does not approve? That means my 100 crore is gone. My transaction is already over. My contract is already over, right? I don't have an occasion now to determine whether I can continue the contract or not. once my transaction is closed, I have just to continue the payment of rental. Unless I have an opportunity to renegotiate, rediscover, I don't think there is a requirement of doing a materiality test again. Is it a contract or arrangement or transaction that I'm doing today? No, this contract was done way back. So that's the reason why
Not
I'm
expressly also stated that you
Amit,
have to take an
see
approval.
Amit, here what will happen? We may say any stories to the regulator. How much he will buy, it is a question, number one. Number two, are these transactions are going since long or just before going to the IPO, you are trying to push as many as possible? If the regulator can establish that you have just pushed these transactions before IPO so that you don't need to go to the shareholders, then definitely these transactions will
fair
be
point.
challenged and
I
the
agree.
regulator will not accept your version.
Yeah, fair
Now,
point. I
how you
agree.
will, if you want, now, one minute. If you want to contest the matter, how it is going to take what shape and all, we don't know. So theoretically, we may take any view, but practically, my advice, if my client is there, I would certainly tell him that it is a transaction. You are not taking because it is a material related party transaction. Post IPO regulation 23 gets triggered. Whether it is applicable or not applicable, 23(8) I can trigger or not trigger. It is always a question of facts when it comes to the before the regulator. Okay, that matter need to be contested and simple interpretation of the law. We may say either way, but that is not the one. So anyway, what we will do is in this webinar again, this issue we will park it up. Okay, we'll proceed ahead.
Whether the appointment of the secretarial auditor needs to be recommended by the audit committee as per the Companies Act, secretarial auditor appointment made by the.
This.
Yeah, okay. It is observed that the same ID is appointed independent director. This we already discussed this actually. Auditor independent of the code of ethics. Okay, somebody is putting thing. Please must have the checklist to the audit committee. What are the evaluated the compliances for their superior performance without fraudulence also. Somebody wants to have a ready-made checklist from you. That you have to do it yourself for the individual company.
Bala, there is a best practices of audit committee, a publication of ICSI. Please read that, you will come to know about it. Because this is again brought by SSB only, best practices by audit committee, for audit committees.
Those public listed committees accordingly gets priced in the market with lower fees than the industry average. So investors is at large and also SEBI regularly are aware of the compromised status of such audit and other committees of the board.
This is just observation.
This is not a question, yeah. This is observation. Okay. Go ahead.
How do you determine the chairman financial literate? I think we discussed this actually, the literacy. Yeah. Mr. Amit Gupta has mentioned wrongly the members of audit committee of the holding company could be the audit committee of the subsidiary company. It appears to be a slip of the tongue. He may correct it.
No, I didn't mention that the member of the audit committee can be. It was in reference to the independent director, as Sudhakar sir was mentioning, not in context of that.
Okay.
My apology if somebody has misunderstood that.
Somebody has put observation, CFO of the Director of the Finance inadvertently permanent invitee to the audit committee. Okay. Professional qualification will have an additional benefit. This is also an observation exactly. It is unclear whether the audit committee has the authority to provide input to the top management strategy, as his responsibility may fall to the board of directors. Please provide your comments. So to me, as far as input of audit committee, see, it has a multiple ways to look at. One, when we are having the independent directors meeting their audit committee, independent directors and chairpersons are also present. So idea of having a separate meeting of independent director is also in this direction only. And in any which case, suppose audit committee jointly has decided something which is in the larger interest of the company as a part of a strategy.
The expectation is always that the audit committee can always meet to the chairman of the company and the board and can apprise, and those matters can be taken up at a larger forum, and the board of director can be apprised, and board will be happy to receive those suggestions. I don't see that there is anything that stops the audit committee from placing these recommendations and suggestions.
NAFRA is actually tightening the rules of the listed companies rightly, so as to India being so vast and different to every states, to various ways in which these issues are should under the wraps, and not much is actually reversed in the public at large.
This is also observation, I think. It's fairly okay.
Just to give me a minute, please. 1 minute, please.
Ashwini, you take up in the meantime.
Is any compulsion for holding company to review loans given and investment made by its subsidiary?
I think regulation 23(2) is very clear that it is a duty of the audit committee of a holding company. There is no escape.
Is it mandatory for VOCO to share the WBC received by him before starting the investigation with the chair of the audit committee if the whistleblower company policy is silent on this? Vigil officer or compliance officer to share the whistleblower complaint received by him before starting the investigation with the chair of the.
He can conduct the investigation and subsequently he can inform the audit committee about the progress of that. He don't need to inform
And especially
beforehand.
if WBC is silent, then certainly it can be. Yes.
Omnibus arm's length are words helping us to approve RPTs. What is specifically to be looked beyond arm's length for omnibus or RPT?
I think one thing that we should look, it is arm length basis. It is not arm length price. Many times the mistake is that it is arm length price. It is not just price, it is basis. It could include the other terms and conditions. It could include the credit period. It could include the rate of interest. It could include the other qualitative parameters. So it has to be reviewed. There are certain terms which are not capable of being defined. Ordinary course of business and arm length is one such word, right, which has rightly not been defined, and it will kept to be understood for the context in which they are coming. I think
Okay, how should an audit committee practically determine the materiality of the RPT beyond the quantitative threshold in SEBI LODR, especially when the qualitative reputational risk, shareholders' perception, etc., are high?
No, so far the question, I think what Mr. Malik is asking is that I am presuming that it does not touch the materiality threshold, that is 10% of the consolidated turnover of the previous year. But he's saying that the risk of reputation is very high. So should I place the transaction for the shareholder approval, or can the audit committee recommend it for the shareholder approval? To me, answer is no.
Whether the audit committee insists on the review of the group signing authority for financial transactions, as this responsibility may fall on the board of the directors, and passing the resolution required by the bankers. Please provide your comments.
No, I could not understand review of the group.
Whether the audit committee insists on the review of the group signing authority for financial transactions.
So it is talking about, perhaps he's trying to indicate that can we have a one person in charge for approving the transaction at a group level. I think to me, if I have understood correctly, I think Sudhakar sir will be the right person. He has headed that as a group where multiple corporates had operated. What comes to me, it is a pure and pure choice of a particular company and group, how they exercise the power, how they delegate, how they want to control. There could be different methodologies to do the control mechanism. There could be different methodologies to have a administrative system for doing the signings and all. So one formula may not fit to all, right? For one particular case, maybe the delegated power may work. The other case, the delegated power may not work. Maybe Sudhakar sir can supplement.
Technically, could it be?
Yeah.
Technically, could it be possible? But as a good corporate governance practices, the board should not approve the transaction rejected by the audit committee. Yes, I think you discussed elaborately on this.
Yeah.
Can the audit committee be convened with a shorter notice by taking a prior approval of the IDs?
100%.
Sir, my question is how the independent directors' conduct is checked in appointing the board NRC. So I have noticed that the independent director as a director defaulting company, and they are getting appointed independent director in the other company. I think Amit has explained very categorically in the beginning only.
Failure by any one person in identification. Who is identifying? NRC has a role to identify. If NRC fails in identification of a right person, it is whose failure? The law can only provide the framework. Law has provided the framework that you have to do diligence. But if you don't do diligence, if you keep ignoring the things, if you keep ignoring the signals, then law will not come to support you.
Correct. It has to come within, because law only can give the framework, but you have to adhere. That is what it is. How can the independent director, IC company, practically exercise themselves without facing the isolation in case of the companies with the strong promoters? I think you discussed this also was addressed actually earlier. Are there any overlap period between the valid of such approvals RBT or recommendation RPT or the audit committee under the Companies Act versus SEBI LODR regulations? Overlap period,
I think Mr. Kishore is talking about omnibus approval, which had been subjected to the shareholders' approval, which are now material, say. So there is a maximum period from one AGM to another AGM or 15 months. That is what I think. So your audit committee approval may be valid for one financial year, and your shareholder approval will be valid for, say, 15 months. I think that is one area which comes immediately to my mind, which may be the overlapping period. So you have given the omnibus approval for one omnibus transaction for a financial year 2025-26. This omnibus transaction has been subjected to the shareholder approval also, maybe at 30th September 2025 AGM, and will be valid till next AGM, that is 30th September 2026. So next year again, you will be required to take the omnibus approval for that limited period before you proceed further. That's, I think, one area which comes to my mind.
Explain as to why the independent director of the defaulting company are still appointed on the board. Often the companies have independent director, why NRC does qualify them. This is what you said actually earlier question also. It is more or less in the similar line only. In case of the government company, the two members are there in a committee. Now since more than the 6 months, the independent director is yet to be appointed. Can we say that the audit committee is actually constituted properly?
So it's a government company, 2 members are there in the committee. So it is having improper constitution. Minimum 3 members are required for audit committee.
Correct. It is not validly constituted. That is there.
Yeah.
Considering the accountability of the audit committee members, the NRC, what are the best practices that can be implemented in the audit committee meeting? Minutes drafting, ensure proper governance, how detailed the minutes should be without over documentation risk.
I think guidance note on secretarial standard 1, as Sudhakar sir keeps repeating in his sessions as well. and advocating that one should adhere, I think it has beautifully captured and articulated as to what should be captured in the minutes, what should not be captured in the minutes. We should follow that and we'll get the answer from there.
Absolutely, you are right. In fact, time again in various forum, it is actually being referred by Sudhakar and as well as by me. Our ICSI has brought out excellent, guidance notes in each and every subject. Some other people do not take note of these. People do not go through it. Very sorry. What the governance style should the secretarial department maintain to ensure continuity monitoring rather than one-time compliance? What governance style should secretarial department maintain to ensure continuous monitoring rather than one-time compliance?
I think it is talking about systems and processes. I think it is nothing else. You need not have just one time compliance tick that SEC audit will be done once in a year and your duty is done. It is concurrent. So if you have put systems and processes in place, you will not only do the compliance, but your systems will ensure that adequate governance norms are also complied with. So you have to work on developing systems and processes. Once that is done, once that is in place, I think governance will automatically be taken place.
Now that deep technology started playing big role in the business, it's desirable to have a technical expert as a member in
We are already short of by 10 minutes. Please take only relevant questions and rest the observations and all, please leave it.
Okay. A subsidiary in the central service provided software and related transaction services on a continuous basis on the holding company and not on the outside parties. Subsequently, charge as per the actual cost plus market method. Whether such pricing will be considered an arm's length price and therefore no need to take prior approval of the audit committee for such RPT.
So it is possible. You have to see, you are saying ki I am taking cost plus markup, but point is that your cost versus cost in the market has to be seen. Your subsidiary may be providing the software, the cost may be higher, the same software is provided much cheaper in the market, then it may not be in the arm's length. Just because your subsidiary is incurring extra cost for producing that software, that will not justify and make the price as arm's length.
The statutory auditor comments on the failure to the recording the audit trials facility, which is does not face the feature of the such facility in some transaction. Accordingly, the audit trial is above auditors were unable to provide comments because of the absence of such features in certain transaction. Can this comment be a qualified opinion?
Yeah, definitely it can be a qualified opinion because audit trail is now a requirement and mandate under the Companies Act. And if company has not maintained the same and auditors are not able to provide, certainly means it's a disclaimer of opinion that they are not provided with the facility to make a review whether audit trail system was in existence and was working efficiently or not. So it's a qualification.
Considering the accountability of the audit committee members, NBSC, what are the best practices that can be implemented in the audit committee meeting minutes drafting? Again, the minutes drafting only it is coming actually. You already answered, you'll have to go through the guidance notes. Whether the audit committee can allow invitee, the internal auditor, to remain present in the meeting throughout the meeting.
I think it is all subjective. Bala sir, it has always to be reviewed by the chairperson for which item I need the internal auditor, for which item I don't need the internal auditor. Invitee is invitee.
That question we have discussed, board approval, ACB rejected, that we talked about it.
Yeah.
Yeah, the omnibus approval should be taken in the last meeting of the financial year or first meeting of the financial year. It should be prior approval. It should be prior approval. You cannot take it subsequently. Prior to the year starts, you'll have to have the approval with you.
No, Bala sir, just
Yeah.
to add, means again, this is a misconception. Unless and until I have a requirement that I'll be going with the transaction on 1st April of any year, nobody mandates me that I should have in the last week or last month of the financial year for the purpose of having omnibus approval. I can always take, see, it is not that I have missed the bus, I cannot ride the bus again. You are in the month of April, you have not taken omnibus approval. So far, you have not done any related party transaction for omnibus basis also. It is okay. You can always take that approval in the month of May when you are going to have another round of meeting. That will be valid for the remaining period. It does not mean that once you have missed that February or March bus, you cannot ride it again. You can always ride it. You can have it subsequently. But ideally, given the opportunity, I will always say that in the last meeting of the previous financial year, it should be approved so that from the day one, you have necessary approval in place so that your transactions are not stuck.
For yet to be DRP issued in some company, whether it is mandatory to have as the company secretary. If there is a delay in appointment due to the conversion from the private to the public company, whether you directly or KMP, like a CFO, can also be the unaudited financials. I'm not clear what is this question. For yet the DRP issued, then company, whether it is mandatory to have a company secretary.
DRHP, which company has filed for SME listed, they are
Yeah.
asking whether it is mandatory to have, but it is not relevant to our today's session actually.
Okay. Yeah, that is all. I think all the questions are over with this. I think I read out everything. So all our questions are over. Let me see any hands are risen here. I don't see any hands are actually risen here. Yeah, one hand is there, I think so. I think there is a gentleman called Prashant Kumar. He has raised a hand. Prashant Kumar, you can actually unmute, you can talk.
Hi, sir. Good afternoon,
Yes.
sir. Sir, I have
Yes,
a
please.
question actually. I have put in the chat box. So, my company is a government company. So, there are actually earlier 3 members who are there in the audit committee, including independent directors. So, right now, independent directors is not there since last more than 6 months. And the 2 existing members, I have been conducting audit committee. Because in government company, we do not know when the independent director is being appointed. The file is under process, and DP is also is taking the initiative to appoint independent directors in various PSU. So in that particular case, my case, whether this constitution of the audit committee is proper or not.
It is not proper. It is not at all proper. Whatever reason you may say, tomorrow ROC can actually take it. It is actually not constituted properly. You are open for liability. It is not at all.
Generally, Bala sir, in case of government company, there is a standard waiver which comes from the SEBI stock exchanges as well. I have seen many waivers from BSE, NSE as well in terms of improper constitution of the board of director with regard to independent director, for audit committee, for NRC. So I don't see that there will be any penal consequence. But yes, your question whether your audit committee is duly constituted or not, answer is your committee is not duly constituted. But you may continue to have that committee for performance of the duties and responsibilities by the audit committee till the time you have new inducted independent director.
So then the decisions taken, will they be valid in that case? By the
Decisions it will be the board of director who will be taking the decisions. Ultimately, audit committee, when is not duly constituted, whatever decisions you are taking will not be considered as the decision of the audit committee.
Okay.
But anyway,
One
government
more
company is altogether a different company because there are a lot of bureaucratic and other issues, etc., which are there. So in
Yes,
such a
yes.
case, it's very difficult. In fact, company secretaries are having a very,
Sir, being the company secretary, I am also facing the same problem because
I
it's not in my hand to appoint the independent directors.
Yeah, yeah, absolutely,
I
Prashant.
can,
Absolutely.
I can instigate my management that please, sir, जो है, please move that file to appoint the independent director.
Absolutely.
anyway, it is a sorry state of our company secretary working on the government companies are walking on the tight rope. That's it. Yeah.
Yes, that is correct. Sir, one more question is, sir, basically as per Companies Act, secretarial auditors are to be appointed by the board. Basically, it's the purview of the board to appoint the secretary. But as the initial discussion, this audit committee also look after this appointment of all secretarial auditors, cost auditors, and statutory auditors, whatever it may be. But is it requirement that the audit committee should recommend the appointment of secretarial auditor to the board? Is it a good secretarial practice? If you can ask.
Yes, absolutely. That is what the discussion we had. I think Sudhakar sir has very categorically clarified that even the secretarial auditor appointment is required to be recommended by the audit committee, and thereafter the matter will be considered by the board, and then of course, as per the new 24A, the matter will be placed before the shareholders.
Actually, forget about all those things, but as a good corporate governor, this is being a governance issue. Naturally, it has to come from the audit committee. Whether it is the private, whether it's a listed company or unlisted company, whatever it is, as a best practice, it should come from the audit
Sir,
committee.
so far as the Companies Act is concerned, it is mentioned only the secretarial auditor's appointment as per the threshold limit, if you can say, then it is the approval lies with the board. And here is also in government companies, I have seen they are taking this approval by board only. So no recommendation of the audit committee, I have not seen it. Especially in PSU, but rest of the
Prashant,
companies listed.
Prashant,
Yes.
I agree from where you are coming. You may, because the section 177 strictly does not talk about, now you have a liberty to interpret. We may debate what is the meaning of the term auditor, if it has been covered with the secretarial auditor or not. We may debate, but matter of the fact, as Bala sir has mentioned, if we want to be right part on the governance, then we can insist the audit committee to consider the recommendation for the appointment of SEC auditor also. If you are not doing, then so far so good, as long as you are not being questioned on that particular part legally, we may be in a position to defend that. But yes, if you have a possibility, then one should always explore that possibility, because it's a very thin line. Every time we'll not be able to make a distinction that auditor means only statutory auditor, because when it comes to many places, if you see 143.12, where it has been clarified also, so the auditor includes the secretarial auditor also. So for one purpose, you can't say that I will take advantage, for the other purpose I will not take the obligation. So you'll have to harmoniously read and interpret the provisions, not to take the advantage.
Absolutely correct. I think that is all. I think we already answered all the questions. Hands are risen. Already we are 120. And I can see actually at this time also there are almost about 160 participants are there. So that shows the importance of this particular topic. Amit, great deliberations. We have a great privilege of listening from you. And you are always, in the past also, I have seen, you are always, sharing your personal experiences, giving the oversight and giving the clarification, etc. Today, we are definitely gained much of your wisdom actually, because there is always a saying, we learn from others' experience. That is what really we have learned. Thanks a lot for your sparing the time and giving the support to us. Actually, I already appreciated you. Nice presentations, wonderfully made, brought out all the issues very clearly and putting down the things. My great appreciation to you.
Thank you.
I think I don't see Sudhakar. Sudhakar, I won't make a separate thanks to him because he's always there, our in-house expert. He always gives, thought-provoking ideas and thoughts, etc. and all this thing. We had a benefit of him also. Thanks a lot. With this, we close the session. Thanks a lot to all of you. Have a good weekend. We meet yet another session the next week. Thank you.
Thank
Thank
you.
you. Thank you, sir.
Thank you, Ashwini. Thank you.
Bye.